Hey guys, I'm Adrian Ramirez. Hope you guys are having a great day. Before I start, help me out by hitting the like button and subscribe. It will help out a lot. Let's get right into it. Billionaire chairman and CEO of Berkshire Hathaway, Warren Buffett, has bashed on Bitcoin yet again. He told Fox reporter Bitcoin is probably rat poison squared. This all started on May 6, 2013 when a Fox reporter asked what Charlie Munger thought about Bitcoin, and he stated that it was rat poison. This was when Bitcoin was $100+. Here's a clip of it.
Bitcoin, this digital currency that's out there that people say, oh, it might be the next big thing. What do you think?
I think it's rat poison. Put him down as undecided.
Fast forward to this week when Bitcoin is about 9,000. The same reporter asked billionaire Warren Buffett before the Berkshire Hathaway annual meeting on Saturday if Bitcoin was still rat poison, and he said it was probably rat poison squared. Here's the clip of it.
About 5 years ago, we asked Charlie Munger, we were sitting right there, what he thought of Bitcoin, and he said rat poison. Yeah. Back then it was about $100+ per Bitcoin. Today it's 9,000. Is it still rat poison?
Well, probably rat poison squared.
Bitcoin enthusiasts weren't happy about it. The price of Bitcoin took a dive after Warren Buffett's criticism of the cryptocurrency. Bitcoin had been closing in on 10,000, but it fell nearly 6% Sunday and was down another 2% Monday to just over $9,300. Warren Buffett has been a Bitcoin bear for years. He has often compared the cryptocurrency to gold, saying both assets are speculative and don't produce earnings and dividends like stocks do. During the Berkshire annual meeting, Buffett responded to a question from the audience about Bitcoin by saying that cryptocurrencies will come to a bad ending. His argument against investing in Bitcoin comes to the fact that it's not a producing asset like land or corporate shares. That means price gains are dependent on more people coming into the market, so one holder can sell it to the next at a higher price than they bought it for. Here's a clip of it.
Of cryptocurrencies approached that of Berkshire and Apple last year. And clearly the idea behind crypto will affect conventional banking groups where Berkshire is a shareholder. You always say you didn't go into too much detail to obtain an understanding on cryptocurrencies. So what factors caused you to say that it's a bubble?
Well, generally non-productive assets remain, if you had bought gold at the time of Christ, and you figure the compound rate on it, it may be a couple tenths of 1%. It essentially is not going to deliver anything other than supposed scarcity, because you can only mine so many. But so what? I mean, what does it produce itself? The check is a wonderful idea. Just imagine how the world would be without being able to write checks or have wire transfer of funds. But it doesn't make the check intrinsically itself worth a lot of money. And if you said you can't use something called check with a little piece of paper, you'd do something else to transfer money. I think that anytime you buy a non-productive asset, you are counting on somebody else later on to buy a non-productive asset because they think they can sell it to somebody for more money. And it's been tried with tulips, and it's been tried with various things over time, and it does come to a bad ending. I mean, you have a hard time. You can think of raw land. I mean, the Louisiana Purchase was, say, $15 million for 800,000 or so square miles of land. In fact, you're sitting on land that came with the Louisiana Purchase, and so what we pay? We paid $20 a square mile, and 640 acres in a square mile, and you're down to 3 cents or something. So that was a pretty good purchase of what was then a non-productive property. But it depends. But it's very hard. You can buy stamps. Bill Gross got collected a wonderful stamp collection, and it sold for more money in the end. But it's dependent on somebody else wanting to buy, hoping they will sell it for more money, and so on. And in the end, you make your money out of productive assets. If you buy a farm, you try to estimate what the crops, what amount per acre of soybeans or corn or whatever may be raised, and how much you have to pay the farmer that farms it for you, and what your taxes will be, and various things. And you make a conclusion based on what the asset itself will produce over time. and that's an investment. When you buy something because you're hoping tomorrow morning you're going to wake up, and the price will be higher, you need more people coming into it than are leaving, and you can get that, and it will feed on itself for a while, and sometimes for a long while, and sometimes to extraordinary numbers. But in the end, they come to bad endings, and cryptocurrencies will come to bad endings, and along with the fact that there's nothing being produced in the way of value from the asset, that you also have the problem that it draws in a lot of charlatans and that sort of thing who are trying to create various sorts of exchanges or whatever it may be. It's something where people who are of less than stellar character see an opportunity to clip people who are trying to get rich because their neighbor's getting rich buying this stuff that neither one of them understands. It will come to a bad ending.
Berkshire Vice Chairman Charlie was even more blunt. Munger said to Buffett, "I like cryptocurrencies a lot less than you do. To me, it's just dementia. It's like somebody else is trading turds and you decide you can't be left out." Here's a clip of it.
Charlie?
Well, I like cryptocurrencies a lot less than you do. And so, to me, it's just dementia. And I think that people who are professional traders that go into trading cryptocurrencies, it's just disgusting. It's like somebody else is trading turds and you decide I can't be left out.
Back in 2014, when Bitcoin was trading for about $600, Warren Buffett called it a mirage. Here's a clip of it.
I was at a conference, the Allen & Company conference in Arizona, the tech conference, and Bitcoin was the big two-syllable word that everybody was talking about and trying to understand. I'm just curious of your thoughts on that.
Stay away from it.
Stay away from Bitcoin.
Well, it's a mirage, basically. I mean, it's a method of transmitting money. It's a very effective way of transmitting money, and you can do it anonymously and all that. A check is a way of transmitting money, too. Our checks are worth a whole lot of money just because they can transmit money. Our money orders, you can transmit money by money orders. People do it. I hope Bitcoin becomes a better way of doing it, but you can replicate it a bunch of different ways, and it will be. And the idea that it has some huge intrinsic value is just a joke, in my view.
That's interesting to compare it to those things. Have you thought of that? It's like, yeah, I mean...
That's what it's doing, it's transmitting.
There's something that the checks are actually you're drawing upon something. It's not the...
You're transmitting money.
It's up with value.
Yeah, it's dollars on both ends. I mean, from the guy that puts it in.
Right.
Yeah.
What thing?
Isn't it a ledger? It's a ledger, right? It's an electronic ledger.
Yeah. It's a very fast money order.
Even with the most recent pullback, Bitcoin has drastically outperformed the stock market, Berkshire stock, and top Berkshire holdings like Apple. This is why some cryptocurrency experts think that investors should ignore Buffett and Munger's repeated Bitcoin bashing. What do you guys think about all this? Let me know in the comment section below. That's the end of the video. I want to disclose that I do own some Bitcoin. Also remember, this channel is for information and entertainment purposes only. I am not a financial advisor and all investment involves some degree of risk. Please invest responsibly and do your own due diligence. Thanks for watching. See you guys. Bye.